Good afternoon, welcome to another weekly video with Bill Hubbard here. Not much talk about the initial jobless claims at lunchtime, but yesterday we had the UK employment figures out, very strong indeed.
Yes, quite interesting. I think what we will need, and I think we'll get some serious jawboning from Governor Carney and his associates over the next whatever, and of course next month we have the quarterly inflation report. But I think one of the things, it goes back to July of last year, we were talking about, well, it could be early 2016, late 2015. I mean, after yesterday's data, the market implying, it's going to be fourth quarter of this year for interest rates to go up.
Yeah, so it's a case of amending forward guidance.
Yes.
So forward guidance, obviously for those that aren't aware, is basically letting the markets know as and when interest rates are likely to go up, and they say 7% is the time when they consider it in terms of unemployment.
But I think you just said the key thing, and I hope our viewers are listening to that. This is forward guidance. This is not pressing the button. This is just saying this is a level that we're at, and so therefore. But I think most of the people feel that whether it be the February NBC meeting or the February inflation report, I think, do they change the forward guidance as the Fed did last month, saying, sorry, the market is improving better than we thought, so instead of 7%, maybe the 6.5 would be more realistic level.
And so it'll be interesting to see as and what they say, whenever they say it. And so what are the implications for all of us? I mean, the implications for markets are, not good in equity markets. Well, businesses will have a higher cost of borrowing, but for us, I mean, we're talking mortgages, credit cards.
I think you just said it, okay? There's not a soul out there in any part of the world that is talking inflation in any way, shape, or form. So when you're in a, quote, disinflation or deflation environment, okay? And we saw this yesterday, okay? We saw real wages only up 0.7%, okay? Although inflation has come down to 2%, it's still the widest spread in almost 40 years. But as you just said, okay? Your wages on a real basis are going down. But is your credit card bill going down? Is your mortgage going down, et cetera, et cetera? I think this is one of the things where, I mean, I don't know the exact number, but there must be 12 to 15 million mortgages out there, okay? That if you're not getting a pay rise, then you have to start paying another 50 or 75 quid, et cetera, et cetera. So this is something that could not derail, but definitely slow down the recovery, because it does mean that the individual will not have that much more money, if less money.
Because of course, a small interest rate rise, let's say from 0.5% to 0.75%, is over 25 years of a mortgage is a lot of extra money for
Yes, it is.
I think that's probably overseen somewhat.
And I think that is, definitely what the bank and the chancellor and the economic gurus are going to have to get through, is that, this forward guidance is just that. It's a roadmap. It doesn't mean it's the definitive.
Right. Okay, so
one more thing. As we saw yesterday, I think, what was it, 167,000 new jobs. I thought it was quite interesting. I guess on page 342, paragraph 9, there was a chart from the Office of National Statistics, okay? 76,000 of those new jobs were estate agents.
Was it?
Yes.
That is interesting. Well, while we're on that, the housing market, what do you think is going to happen to that?
Well, I mean, we've seen how it is. I mean, anybody who lives in this country knows that there's London and there's the rest of the world. One of the things that we are starting to see is, quote, the north-south divide that we've all known about. We're starting to see some very positive improvement in Leeds, in Newcastle, and Hull. So, where these may have been depressed areas, this is an area that's starting to show some very positive improvements.
But in terms of an interest rate rise, that's going to have a very negative impact.
Yes, especially, again, we're talking about an area, Roman Abramovich really doesn't care whether interest rates go up or not, you know what I mean? It's not going to affect his, but I mean, if you're a young couple, or if you're a new business, just starting up, you don't need a kick in the teeth. Just when you start to feel, better, about the business, about the economy, etc., etc.
Okay. We talked last week and the week before about the strength of sterling. It's stronger than it was.
And we've seen it today, right?
Yeah, I have. I mean, what's happening with that? Are we
Well, I mean, you saw the new young lady at Burberry, okay, last week was talking about, like at 163, 164, Burberry could lose as much as, 5 billion pounds in non-competitive business, okay? So you got, sterling at 166, the euro now above 136. I mean, this is something very serious, okay, that both the ECB and the Bank of England have got to start talking down. And of course, as you just mentioned, I mean, yesterday, with the unemployment numbers, market feeling, well, interest rates have gone up. Fourth quarter of this year, 167, 168, 170. I mean, these are maybe astronomical levels, but there are levels that will continue to have a negative growth impact, both here in the UK and especially in the Eurozone.
Do you think its only option is to come down from here? Would you be short?
Yeah, I am. I mean, I'm not short sterling. Okay, I'm short euro sterling. I feel to be short sterling, we would have to reach a level like 167. So therefore, we don't advise clients, but our thoughts, comments, strategy would be, anywhere from like 164.50 all the way up now. You're in and out, in and out, in and out. Okay.
Okay. Earnings season. I know you're not particularly interested in technology stuff, but Netflix are having a huge jump up today.
Yes.
Based on earnings. I mean, it looks starting to look a bit like the future. Are you
well, I think
worried that you don't have any interest in the future?
No, I mean, it's just like if we'd had this conversation 15 years ago, we should have bought Blockbuster. You know what I mean? Yeah. And now, even if you look at Netflix, okay, I don't know whether over here, but I've got several friends of mine in the States. Netflix has reduced the number of videos or whatever you want to call it, okay? So they are, changing their mix here. But you see, I'm not a, I still have a, dial mobile telephone, so I'm not into iPads or iPhones or this kind of stuff. But you see, I see it, and I was, talking to a print journalist this morning, okay, over coffee, and she was just talking about, I guess, my generation, when we started, we had to wait for the 10 o'clock news. We had to wait the next morning till the Wall Street Journal, the Financial Times. I mean, now it's a situation. I mean, we know what's going on in Kiev before it even happens, okay? So does this take a lot of impact out of that? And will we reach a situation, my wife and I were just, going through some, family photos with the grandchildren over Christmas. This was sort of like saying, well, like, you have a picture of your grandmother? Yeah, I had it, but I took it off my iPhone yesterday. So what's going to happen in 25 years? Will anybody remember grandparents? This was my first house.
Well, I won't give you a technology lesson, Bill, but there are ways of keeping those.
I'm sure there are.
Let's move on to Davos.
Yes.
This is the World Economic Forum, which is a whole load of people not linked to economics at all.
How can you say that? Goldie Hawn, Matt Damon, Bono. I mean, come on.
Damon to us.
These are market movers, shakers.
Okay, well, they're all there. And what kind of stuff are they discussing? And what would you keep your sort of ears?
Well, I think the interesting thing is two people made comments yesterday. One was Ken Rogoff, who's senior economics professor at Harvard, which is a fairly decent university, and he just made a comment yesterday that the introduction of the euro was probably one of the greatest mistakes in the history of the world. And then you had Axel Weber, who is now chairman of UBS, used to be chairman of the Bundesbank, and he said, you better be prepared. I mean, there's another problem right around the corner, okay? Well, I don't think they saw the manufacturing and the service PMI numbers out of the Eurozone today. I mean, they were, the manufacturing was up at a 2.5-year high. And so you see the euro was storming past 136, the figure. So, you have the politicians or but I don't know. I mean, I'm not watching this year because Maria Bartiromo was not there. So, I mean, you can't give me an idea of what's going on. And, again, the world has no meaning.
No, okay, fair enough. What else? Were you pleased to see the McDonald's? Less people going to McDonald's?
I don't know. I don't go to McDonald's, you know, we don't take the grandchildren to McDonald's, but I think from a standpoint of an economic recovery, I think this is positive, because I'm sure 2-3 years ago, in the depth of the double dip, triple dip recession, the companies that were making money were McDonald's, were Burger King, Domino's Pizza. No matter what, people still have to eat. So that is, you know, are we now evolving? I don't think we've gone from
But they're luxuries, they're not necessities. You can eat cheaper at food from a supermarket.
I mean, you could go to M&S, you know, 2 meals for $5. I mean, quality, much better food all
So
around.
the move is going to be from that kind of
Yes, I
more
think
quality.
so. And I mean, you know, we have a place called Cook.com, you know, which is one of these places where you can get pre-made meals. I mean, you know, we had people for dinner last night, okay, maybe I shouldn't say this, but I mean, the simple fact is, we had a phenomenal meal that was prepared for us. All we had to do was make it at a cost that was unbelievably inexpensive versus, you know, had we gone out and bought the ingredients ourselves, spent all the time chopping to this and chopping to that. And I think that more and more people are doing ready meals, but I think what you're seeing from Marks and Spencer's or Tesco's or Waitrose or Cooks.com are the food is much better quality than it was 5 years, you know, before. It was just sort of something slapped together, you know.
Because people are working so hard,
Yes,
that's trying to...
exactly right.
All right, Bill. Well, I think we've touched on most things very nicely and not in too much depth.
And I think this last thing, remember, next week we will have had Ben Bernanke's last Federal Reserve meeting on the 28th and 29th. So we should have another 10 billion tapering from the Federal Reserve next week. So it'll be interesting to see how Bernanke finishes in the following week.
Interesting times for the markets next week.
Yes, I think so.
Perfect.
A milestone.
Yeah. Great. Well, thanks very much,
Thank
Bill.
you.
And I'll see you next week.
Yep.